The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on back here to the Diagnostic Trading Hour. I'm your host, Darrell Martin, right here on TFNN, and I look forward to help you out on checking out the market today. So let's look at what's going on right now. And right now we have the S&P down 2.25 points. We have the Russell up 1.8. The Nasdaq is currently down 4.5, with the Dow down 32. Oil is up 69 cents, and we got natural gas up over 1% on the day at the moment. Corn's currently down 3%. Massive move on corn. Great move on corn. A little day late after that report that came out yesterday. So sort of surprised we didn't even see the big move until today. But we got soybeans down 28 points on the day. Euro dollar currently down 43 points, with Aussie dollar down over 1%, down 127 pips. We got the pound dollar down 67 pips, the dollar CAD up 29, and the dollar franc up 9 pips on the day. Looking over at euro yen, it's currently down 6 pips, with pound yen down 18 pips. US yen is up 34 pips, and gold is down a little over, actually right about almost $4 on the day right now. Silver is currently down 81 at 0.82%, almost 1% on the day, and copper also equally down on that as well. So that gives you your current market wrap. Let's check out what all we got going on. There's not been a whole lot of news this week. The one big news was really the no news report that came out by Bernanke when he decided to come on the phone and talk, do a little press conference. But it wasn't a press conference. That was the deal. It was a speech. And so he went and he did this little speech and sort of behind the scenes, but he delivered a speech called A Century of U.S. Central Banking, and this was on Wednesday, of course, but U.S. Central Banking, Goals, Frameworks, and Accountability at the National Bureau of Economic Research Conference. And he was going into the first 100 years of Federal Reserve policy, and we talked about being, just cognizant of that, and then all the market movement happened during that speech on the Q&A session when he's like, hey, there ain't any QE coming for a while. You need to be aware that it will come one day, but it isn't coming anytime soon. And that just made the markets very happy. They took off, went nuts, and that was the big news of the week. Then, of course, yesterday we had our unemployment claims. They came in worse than expected. We had import prices, were down. So even with that horrible unemployment claims report, Bernanke stuff seemed to keep everything afloat. And then today we had PPI. PPI came in better than expected, and the University of Michigan Consumer Sentiment Report came in a little worse than expected. Those were our two big announcements on the day. Nothing that big. So let's go ahead and let's check out the markets and where they stand across the board. I'll pull up a few charts for us, and we'll get the pieces put together and see just what we might be able to glean out of the markets. And let's see, I got a template I put on here. It makes it a little easier for you to read it. And there we go. So we got that one. Oh no, let's not do that. That's going to be too hard to read. Load one more chart on up. And it's a pretty chart, but we want to get the easiest chart to read right here. There we go. Okay. So we like to look over at the 10-minute bars, checking out this level right here to sort of see where everything's standing at. And I'm going to start off right now at our indices. We had the Russell. We had a nice trade on that this morning. It ran on up and then just bounced right off the deviation line. We were on the bull-bear binary hour this morning, me and Tommy O'Brien. Tommy's like, hey, this thing's going to go up. Europe's starting to head down. Indices are going to go with it. Let's go short. And I'm like, I'm sort of long right now, but I do see what he's saying. And, he got in probably a little sooner than I would, but it worked out great. Hopped on in. Thing. As soon as it hit that deviation line, though, bam, it just popped it and dropped. And fell on back down. Heading right back down now toward a gap fill on the small cap. Now, we didn't officially have a gap fill because we opened up, basically right there at settlement from yesterday. But, it went up to half, and it's basically going right back to the settlement. So there wasn't totally a gap because when we opened, we were at settlement. But it's basically the same play. Let's see here. Now, checking this out, let's all look over at the Dow. And on the Dow right here, it sort of went up, went down. Nothing major to write home about. Sort of quiet. Same direction, though. Market popped up a little bit and fell on back down as Europe was shutting on down there. And that's just one thing to always be aware about. At 11 o'clock, that's like the magical time, okay? I mean, you got bond purchases going on from the Fed. You got Europe shutting down. There's so many things happening. And a lot of times we see reversals that time of day. So it's just always good to be aware that that could be coming. Let's go in. Let's check out the NASDAQ. Over on the NASDAQ side of things, just a little oscillation. We did get that drop, but nothing major to write home about right here. Nothing big to worry about. I mean, if it kept going down, it could go to the 30.4250. But we had that solid PPI report. The one thing that we really had that sort of started, dropping the markets, I guess you could say, was the consumer sentiment. But there wasn't a whole lot. It's just the market's just really oscillating. So, and the last one there, I guess we covered all. We check out the S&P, of course. And S&P looks pretty similar to the others. Right here, just getting some, oscillation right there. And nothing major. Didn't hit a deviation on either side. Yesterday, of course, we hit that deviation. I mean, right out of the gate, right there, Bernanke opens his mouth. It's boom, it's up one deviation. It sits there basically all day until right around 2:30, and then it shoots on up to 1.5 deviations. And it's still sort of sitting there right now. If it did pull down, where are we going to? Probably 1662.75 would be about the lowest we might head on the S&P. But it's really, there's sort of you can sort of just do your classic support resistance levels right over here, and you can see a pretty solid support level right there. It's really right at the 1667 area. And it's just been bouncing off that over and over and over again. It might decide it finally wants to break through it. Going into Friday, people want to take some profits after these big monster gains. And that's really what could make it move on you. Okay? All right. So that wraps up our indices. Let's go ahead and let's check out our energies. So over here, let's go ahead and rock on over to oil. And we can see we had some just big volatility built into the market yesterday, and it definitely had the big volatility just because it hit its massive move the day before. But we can tie on in. Let's look at today, and we've just been bouncing up and down between half a deviation level. And so that half deviation level right there, just, we're at it again. And we've been at it several times today, and we've been sitting here for about the last hour. So I would not expect a whole lot more out of oil for the rest of the day. It just doesn't seem like it has a lot of oomph left in it. And so I wouldn't be going long again right now. And I was actually just talking to some other traders. They're like, man, oil, it's been, it did that great reversal. We caught that and got a couple moves up. Do you think it has a chance to keep going? And I'm like, at this point, I think it's done. We're coming up right here in, an hour on the closing bell over on oil, over in the pits. And I just don't really see a lot more there. To me, it's just not worth it. There were some awesome moves you could take advantage of today. And why give all that back? So, let's check it out. Let's go in a little bit deeper, and we'll check out our natural gas. So right over here on natural gas, over on the NYMEX, we can see we moved up one deviation. We almost hit 1.5. So a pretty big move on natural gas. And then it's coming on back down. We're back down right now to half a deviation. It might go back in and fill in the gap. It's been really, really volatile today. I'm hesitant on natural gas. It sort of scares me. It moves so fast and so far every single day. But a lot of people, they love it. You can trade it over on Nadex. And at least you have defined risk if you're going to trade it. So it's a pretty wild instrument to hop in and trade. And it's not super liquid over on the future side. So you want to be careful with it. Let's go ahead. Let's check out our ags today. And really was sort of disappointed with the moves we had yesterday, on the West report right there. But today, it's like, I guess we'll go ahead and drop. And so now it's already down a deviation and still moving down right there. Corn is on its way and just been heading, perfect moves. And we'll see if it keeps going. We'll go ahead and we'll check out soybeans now and narrow on into that market over here. And we can look a little bit deeper right there. We see it's already down 2 deviations on the day. So just a spectacular move on soybeans. And, I love the ags. Most of the days I love them. I was shocked that we didn't get a decent, better move yesterday. I was expecting that. I was looking at a straddle on it. And I was just not super happy with that lack of movement that we had on it. But I was like, come on. But, it wasn't that bad. It just... you think you'd get a nice trend. Sometimes you got limit moves on those days. So, I go for them and see if we can get something. But there's nothing really laying the cards out there the way that I wanted it to. So, let's see where else we can go over here, what else we might have. But that's our soybeans. So, look at that. We're doing beautiful right now. We're below, by the way, the 2 deviation line. And just some really, really good moves. And there's just no better chart than a clean, nice trend that you can take advantage of right there. All right, so that's our ags. Let's go ahead and roll on around and get you caught up over on the metals. Let's look at gold right now, see where gold's sitting at, and we'll hop in, look at silver and your copper for you. So we had gold has been a little, just bouncing around here, right? So we had to move up to half a deviation last night. And then it dropped all the way down to 0.7, back up to settlement, and now just sort of, floating around in the air there. And, that's definitely a full deviation move. You just measure like 1 deviation to settlement. And I'm using implied deviations here. But I can't read that. Let's see. Let's click on the text and go in. And what we'll do is we'll change our text color. I don't know. That'll work. To blue. And so we got about 16 points right there. And if we go from the high on gold to the low on gold, it's going to exceed 16 points. And so on that one right there, what we can see is we got to make that a default. All right. We had 20 points. So we actually exceeded the 1 deviation move down and then popped on back up. And, gold is going to be closing down here in 10 minutes. So we are coming down on the last part of gold today. We could actually check it out and see if there's any potential trade setups we might be able to take. And so I'm going to line up and look at that. And it looks like we might have a potential short. So that bearing in mind, maybe we'll go in and pull up a little Nadex spread scanner there. We'll see if we find something. And we might have to dig into it after we get back from the break because it's coming up here in just a half a minute or so. But right after the break, we'll pull it up. I'll have it ready for you, and we'll see if we see a good trade setup. Stay right there.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they They host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Darrell takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
All right, folks, welcome on back here to the Diagnostic Trading Hour. So, sort of looking at what trades we might have set up that we possibly could take advantage of over here. And right now there's only one, and that is the 1278 gold binary. So that might be a potential right there, as long as gold will stay under 1278. It's at 1276.6 and sort of ticking up and down right now. So this is going to be a close one, okay? If you choose to take this trade, it's going to be very close, very tight. You want to be aware of that right there, because if it does hit 1278, the rule you need to always be aware of is you got to get out of that trade, okay? And you can get into it depending upon when you get in, somewhere around 15 bucks. I think right now it's at like 11. But you always want to make sure you're out of those trades. And ideally, you might even want to wait. And I would suggest maybe waiting, let it go up a little bit higher, and let it start turning around and going back south. You know, maybe give up a couple bucks. But right now, it's heading up a little bit. So, you know, maybe just a little bit of down movement. And a lot of times I'll watch like time and sells, like say you're looking at Thinkorswim right here. So I'll maximize this grid sell, and so you can see. So now we're starting to see some down ticks. That's good. That's a good sign, obviously. It just popped up at 17, so you had a chance to get on in there. And but it's moving down 1276.5 right now, and starting to move down pretty good. So if it'll keep moving down, we got just a few more minutes. Not a whole lot time left. We have 5 more minutes. And if it'll stay below 1278, we're in good shape. If it hits 1278, you want to get out, because it's hard to make back that profit if you take the full loss. It's a pretty painful experience. So if you've ever done this before and you haven't taken the loss where you're supposed to, you know what I'm talking about. So don't let your losses run, okay? It is never a fun thing to do. But you got to watch these things. You got to look at them. You want to just see a continual, downtrend. I'll hop on like 5-minute charts, and you can even go smaller. I've seen some people literally drop all the way down to 1 minute, like this right here, and just really make it, a tightly tuned chart. And then they'll go in and we'll throw in, like, say, at exponential moving average and 8, okay, and apply that on there. And 1 minute's really, really, that's obviously, that's pretty tight because it can just change. It's just going to be choppy on you. But, that could be, hey, you know what, I'll buy then because it's below the moving average. But 1 minute, it doesn't take much for it to turn around. 5 minutes usually gives you a little bit more of a consensus of a solid trend. And ideally, you want it to be above that 5-minute moving average when you get in. So the strike price, you want the price of your entry, you want to be below the 8-period moving average. But you want the strike that you sell to be above the 8-period moving average, okay? And so we can look at that. Let's go ahead and put together maybe a couple strikes that we could take advantage of. And I'll put this one back up here for you. But, just watching it, knowing what to do, knowing how to do it. And, we got up here, 1278, though. That's the line. That's the marker. And so price level right here, have to get up to this point. And that seems like a long ways on the chart, but it's not that far. So if it hits that, then you got to be out. If you're not out, you're just asking to get nailed. So if it gets really close right before expiration, you may decide, this isn't worth it. I'm just gonna bail on the trade. So because in those last 2 minutes, okay, those last 2 minutes can be rough if you're still in the trade. And we're on those last 2 minutes right now. So if you haven't got out, you're in until expiration. And you just got to be aware that in those last 2 minutes, liquidity, dries up. See right here, let me show you this. You don't really see any quotes. So there's nothing you can do about the trade. And so it'll let you know you're alive. It'll get your heart racing. Because it's sort of in the next 2 minutes, you're going to find out if you won or you lost on the trade. And that's probably the one thing that you're not going to like about these is those last 2 minutes. So if you can ever get out before then, it is always suggested. Like if you can take profit, like if you can sell at 20 and buy back at 5, that can work out really well. And what they do is they actually take the last 15 quotes, okay? And by the way, you can also go the other direction. That's one thing people, don't think about. You can buy on these. But so they're going to take the last 15 quotes, and they're going to look at them, and they're going to see. So it might close right above. We'll see here. And it seems like right on the line. It's the last 15. They remove the 5 high and the 5 low. And they take the last 25. They remove the 5 high and the 5 low quotes. And they average the middle 15 quotes on the trade. And I've seen some people, they'll love to go in and they'll buy these like $10 ones or $15 or $20 ones. And when they do that, then they can make, massive profits, but they lose a lot. And I prefer to go in and do premium collection. So I'm in a handful of them right now. So I'm watching very closely myself. I'm in them at 14 right now. So I've got about 15 seconds, and it looks like we're going to finish in the money. So that's a nice $140. Not too bad for 5 minutes of work. So it looks like a big loss. It's going to turn into a nice profit here in a minute.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position, for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on back here to the Diagnostic Trading Hour. Okay, so the trade did settle in the money. It got a little hairy there in the last minute. That can get that gets your heart racing, like I said. I'm like, okay, let's see what's going on. Remember, those last 2 minutes, you can't do anything, okay? And it can be a little scary, especially like right at the end, because, I mean, that's when the pit's closing down, so positions are settling out. And so, how do they calculate this settlement price? Where does it come from? Now, I talked about this a little bit right at the end, but right 1:30 is expiration, okay? So they're going to look at literally the last 30 trades, okay? Look at the last 30 trades right there, or the last 25 trades. They're going to take out the top 5, and they're going to take out the bottom 5. And so I can see all these trades firing off, and then they're going to average the middle 15. And that's where the settlement price comes from. And then, once they get that done, then they're going to go in, and you'll get an email that says, hey, by the way, your position for gold just settled. Like, I didn't have to do anything. It just settles, okay? Just settled. You sold the 1278, and you sold 10 of them, and so your payout amount is $1,000. So, $1,000 settlement payout there, and let's see, we got in, we had, maybe 10 minutes left till expiration. Let me see, what time did I get in on the trade? 1:21, so 9 minutes left till expiration on the trade. And so about 9 minutes. Now, payout amount does not mean profit, okay? Payout amount is your risk, your initial risk plus or minus, of course, your P&L, okay? So, or in binaries, it would just be plus your P&L because it'd be the total amount. Every binary is worth $100. And we did 10 contracts, so that's $1,000 maximum value. And I had to put up money to place those trades. I had to put up like $860 to place those trades because I got an average fill there of $14. And so I sold them for $14 and had to put up $86. And since it settled below it, that basically is a settlement at zero, which means in the money, which means I sold at 14, I bought back in essence at zero, meaning that I made $14 times 10, I made $140 on the trade. And that's pretty much how it works. It's sort of that simple. And the scariest part is these last couple minutes. And as you can see, it actually shot up, and I couldn't even, if I wanted to, I couldn't even have got out. Okay? And with some other trader at the very end was crazy enough to, offer me a trade right there, but I couldn't even get out if I wanted to, and then it fell right on back down and I was able to get it. And I usually don't even try to get out in those last 2 minutes because, it could pop up, and if I could be putting a sell for 50, and then all of a sudden it flies back down, and somebody's like, I'll take that. That's $50 of free money. And, so I'm going in, I'm trying to buy or whatever. So you could be on the wrong side of that, and you could put that order in, and then it flies so far one way or the other really quick, and you could get just toast. So in those last 2 minutes, I'm not really putting in an order because it's, I may take somebody's order. I've seen some orders. I've seen some bad orders. I went in, and there was an end of money trade that had like 4 seconds to go, and they were willing to risk 75 to make 25, and I made 75 risking 25, and it was already in my favor. So, I'll watch to see if somebody puts a trade on they shouldn't. But you don't want to put a trade in really in those last 2 minutes. So it's sort of at that. If you're in at the last 2 minutes, you're usually in. You can try to get out, but you better really pay attention because otherwise you could hose yourself, and you could have got out on that trade in the last 2 minutes and got nailed on it. Like I said, if you're going to get out, usually you're trying to get out, before that's up. Now you might be able to get out, and it might work, but if it goes right back in the money for you, you better cancel that order because it could hurt quite a bit. And anyway, so that gives you just a live summary. We did, we've done gold trades, we've done silver trades. I try to do at least, if I can, 1 or 2 trades over on Nadex live on the show, just to make it a little more interesting and adds a little bit to it. And it's a show where ideally you can hopefully make a little money, but at least demo trade it, of course. And I'm trading, this is live. But anything you do, you need to learn with demo first. And so let's see here. What else do we have that we could check out? Now that gold is wrapped on up, we might try to look at some forex pairs closer to the end of the hour as a potential possibility. It is a Friday. It's a little crazy time to trade on forex over there, but we might try to look at some for like 2 o'clock expirations. But that really does wrap up gold for the day. There's nothing more that you can really do on it on Nadex. And so with that done, let's go in. Let's pull up a few charts. We just did gold. Let's go in and let's talk about silver, see where it ended up for the day. It's closed down now in the pits at least. And we got silver moved on down to, actually moved up a half a deviation, down half a deviation. So you got a perfect 1 deviation move. Did a little spike down there to 0.7, came back up to half. But overall, we really stayed in that, low to high 1 deviation range right there on silver. So perfect call. Acting like you expect it to 70% of the time. And then copper right here. Copper is there. And looking over the copper contract, we got to move up and then down to about 0.7. We probably got about a 0.3 up. We can measure that really simple. Let me show you. I've talked about this a few times. I use NinjaTrader. So that's my preferred platform for futures trading. And if I'm trading options, I love Thinkorswim. So it all depends on what market you're trading. If I'm trading Nadex, of course, I trade Nadex with the spread scanners, and for the binaries and the spreads, and that we developed. And then so right here you can see that 1 deviation, 0.0500, and then we go right here to high, and we'll go to the low, and we got 0.0580. So we did actually get a full deviation move right there on copper as well. So just always be aware of those 1 deviation high to low moves. Those are usually turning points, and at least pivot points or hesitation points in the market, and it's the 70% movement. It's the expected move. It doesn't mean the market can't keep going, But it's one of those things, it's sort of a time to start tightening some stops, because you shouldn't be surprised if the market decides to turn around after that. You'll get some crazy stuff like, yesterday with Bernanke. I mean, everything went up besides the dollar. But it's basically, they just, they're just going to print to infinity, so let's go ahead and lower the value of the dollar and increase the cost of everything else. So that's where you saw the dollar get dropped like a brick yesterday. Dollar yen, we got pretty much a deviation move over on the dollar yen as well, from low to high. And see what else we have on the Forex pairs. And I got a question from Richard. Hey, Richard's back from New York. How's it going, man? You there?
Hey, Darrell. How's the roller coaster this week? You keep telling me they're going to move it down to Texas, the Bernanke roller coaster.
I know, right? So bring a show on the road. Sort of like Oprah came to Texas for a while when all the cattlemen sued her, right?
Yeah.
So bring Bernanke on down here, too. So, but...
Darrell, could you summarize essentially the changes on the platform that take effect on the 14th, please?
What they did basically is, because of Dodd-Frank, they went in and they classified everything however they decided they wanted to classify it, which is, regulation is, fire first and figure out things later. And so they classified them as swaps, which really makes no sense when you look at the definition of a swap, because it's fully collateralized. And it's not like a swap where the swaps that got the market in trouble, where people can go in and they can put an insane amount of money on high leverage, and if it blows up, it can cause an economic crash, which is what Dodd-Frank was about. But this sweep just went in and classified like tons of things as swaps. What does that mean? It means nothing. It means that they have to fill out an extra few pieces of paperwork when they open up a new contract, and they got to send over a lot more information on every contract traded, which they just automate. And it also means that they have to. The one good thing, there actually is a good piece about this for you, is that there's higher depository requirements. Like funds can't be mixed with company funds at all. They can't go in and invest that money. And I don't mean like invest in high risk assets, but overnight interest, bonds, things like that. It really limited how they could, what they could do with the fund. The one good thing is it actually puts your money into a little bit of a safer place. That really is all it means. As far as you're concerned, beyond that, it doesn't mean anything. So it doesn't affect you at all.
Well, you have two more questions in terms of the last trade you just did on gold. Would you say that's identical on using Forex pairs? Like, for example, I did a Forex pair earlier in the week on the euro, and there essentially were no trades that occurred, but the quote prices or the indicated price changed drastically. There were no trades on Thinkorswim whatsoever for the last a minute and a half, but the price changed. How does that happen?
Basically, the bid and the ask is moving around. And remember, Thinkorswim is not feeding you all fills of all Forex all over the planet. It's just their data feed. Okay? So Forex is not an exchange. It's over the counter. Right? So every bank can be, you can have, there's about a dozen major ones, but any bank could be involved in Forex transactions. What you want to do is, if you're doing like this type of strategy on Nadex, is go over here and go to the Finder, and underneath underlying markets, look at currencies, look at spot rates, look at, say, euro dollar, okay? Just click on the word spot rates. It'll bring them up, and then open the euro dollar chart on Nadex. Once that comes up, then you're going to go to your options and edit settings, and you're going to look at the mid price. Okay? It'll be less volatile, for one, because your bid and your ask can move a lot while they're trying to fill orders or find orders. Okay? Also, the reason this is really important is Nadex is using the Reuters data feed for Forex. Okay? It's their primary data feed for FX. And they're basing it on the mid price. Because your bid-ask spreads can be really, some of them are like 10 pips wide, right? And last trade, how do you define last trade in Forex? Because it's not on an exchange. All right?
Okay.
Eurodollar spot market is not exchange-based. It's over-the-counter between banks or between brokers or between you and a broker. And so they use the Reuters data feed, which is a multiplicity of banks on best bid offer, and they use the mark of that in between it. And so they're looking actually on Forex, they're looking at the last 25 mark quotes, okay, ticks. And then they're subtracting the top 5 and bottom 5, and they're averaging the middle 15. And so when you're doing like this kind of play, like this expiration premium collection trade right here, then you're really going to want to obviously be paying attention to the closest thing you can get. You can even go down to like ticks if you wanted to on it to see how the market is just changing right there.
Right, it did that, but
it'll be a lot less volatile than it will be if you're looking at bid and ask. And on Thinkorswim, I think you're looking at the bid on the price.
The bid on the
and
price.
You're looking at their data feed. So let's see here.
Yeah, it could be drastically different. Like you said, Thinkorswim, the price that I think you see is not the settlement price whatsoever, quite often.
Right, because the price you see is going to be either. Let's see. Let me pull up my settings in here and see if they give you the option. Okay, yeah. So you can choose bid, ask, mark, or last on Thinkorswim. Right. So if you go to style and then go to settings and then go to Forex, you're going to want to choose mark or last. Is probably what you're going to want to look at. Last is, in my opinion, the best. But as far as trading Nadex for premium collection, I would just go straight to the Nadex chart.
Okay.
So that way you can actually see the price that they're, because that's what it's going to be based on. Now, if you're doing exchanges, you don't care. Now, I still chart, like in Thinkorswim, I chart in NinjaTrader. I'm using those pretty much right up to that point. But if I'm really worried about it being within a tick or two, if it's that close, then I need to be seeing the Nadex chart. A lot of times they'll be 10 or 20 or 30 ticks away, so I don't really care. But if it's that close, and I use last like on Ninja, I use last on most of my charts because I really care about where is it getting filled. The bid and the last is where did it get filled, okay? So where was the last fill? Bid and ask is the current, bid and offer that people are putting out there. So people are saying, hey, I'm willing to buy for this, which means that's going to make the bid. And then people are saying, I'm willing to sell for this, that's going to make the offer. So that's going to be the potential quote is the bid and ask. The market's the average of the bid and ask, and the last is where things were actually already filled. So the last is actually a little more accurate in the sense of historical price fill. But you're going to see the gaps. See these gaps right here when I went to last? Look at what happened on Eurodollar on the chart.
Okay, yeah, I understand it now. It could be, it's the data that I'm looking at may not be what actually is occurring. I understand that. But let me ask a further question in terms of your binary strategy. If you have, on your NinjaTrader, if you have the trend established where it's down or up, why not just have lower risk and sell, if you know, for example, gold is heading down, like, for example, like at 1142 or 1140 today. If your indicator is showing it's heading down, why not sell a binary that's like 85 and write it down to its 20 and then get out of it?
Well, if you could get it down to 20, it'd have to get below the strike significantly to be down to 20.
Well, it doesn't have to move.
So you're probably talking about a 3 or 4 point move.
Well, it moved a lot more. It moved 5.
Right. So that's a great trade if you can do it consistently. I can do premium collection consistently because I don't have to be right about direction. If you want to stay right there, we'll talk more about it.
Okay.
All right, stay right there.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And right on back here, we're checking it out. We got Richard, and we're talking about this potential ways to do these trades like right at the end of the expiration hour. So you there, Richard?
Well, Darrell, my approach is a little bit different than I'm submitting to you, is to lower the risk. And you know, I've gotten slammed on a couple of these that they moved against me in the last 2 minutes. So why not, if you have a trend that you know is going up and down, like at 1140, that 1278 contract, if you would have sold it at, say, 64 at 1140, you could have bought it back at 14 where you sold it at. You know, I could have sold it to you for 14. And my risk is only $40 instead of $85, and I'm making it I'm making a $40 profit.
1140.
Yeah.
Oh, you're talking about earlier. Okay.
Yeah.
Like earlier in the day.
Yeah. Are you able to pull up that chart?
Yeah, I have it right there on the screen right now. I have gold on the screen right now.
Okay, so at 1140 there was like a high. I mean, do you have your indicators will tell you that it's, you know, all the buyers are gone and it's getting tired and it's it's going to trend down. Right. Yeah.
Price action is definitely showing a downtrend. That's correct. Uh-huh.
Okay. So the same binary that you sold, why wait till it gets to $15 to sell it? Sell it when it's at 64.
Well, one, I'm doing it like 5 or 10 minutes before, and you're talking 20 minutes before. So that's a different trade. I do go in and I do sell. I still do in-the-money binaries. The difference is you have to have the movement. If you go with the lower risk, what you're talking about, where it's, say, $20 or $40 or, you sell for $80 or whatever, okay?
Right.
So you got, like, say, a $20 risk on the trade. You have to have movement. If the market goes flat, only moves down a little bit, or moves against you, you lose everything. Okay? The way I'm doing it is I don't have to have any movement. If it moves in my favor, I make money. If it stays flat, I make money. If it moves against me by a little bit, I still make money. And I don't have to have all the risk either, because if I have 20 minutes, then I can take a $25 risk, and I can get out at 50 if it hits my strike, and then I have a 1-to-1 risk, but I don't have to have any movement. So my probability is up because 3 out of 4 possible scenarios, I make money. If you do a out-of-the-money binary, which means a risk less than $50, basically, then 1 out of 4 scenarios will make you money. So you will make more, but you also have just reduced your probability of being profitable.
Well, you also have more time. I have something you don't have. You don't have as much time, to get out of it, even at a small loss. I mean, the point is to lower the risk. I mean, you have $85 of risk of something you can't control in the last 2 minutes. Whereas if you give yourself much more time, if it's stagnant or if it doesn't move a lot, then you're gone.
Right. So what I'll do is if I go in with, so what I'm talking about, the strategy that I'm discussing is expiration premium collection. Like I have 5 minutes, and I'll do them day after day after day after day. I've had probably, I think, 3 in the last month that I've lost. And I've had dozens, and I mean on top of dozens that I've won. Whereas if I do out of the money, out of the money trades are going to lose a lot. You'll get lucky, but a lot of them are going to lose. I would rather go in and sell a trade for 40 and buy it back at 20, and then have a stop loss up at 60. If I'm going to do a really close one, and I do a lot of those. So I'll do like where I literally sell at 40, sell at 35, buy back at 15. I can still have a 1-to-1 risk-reward scenario. But I just do it with I always start in the money because I want to have those 3 out of 4 scenarios in my favor. Because betting on it to move in my direction fast enough, far enough, hasn't worked out that great for me on the binaries.
Okay. Thank you for your help, Darrell.
But good stuff. You bet. Yeah. All right. We all have a great day, and we will see you on Monday.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.